Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, what will be the topic of your presentation at the upcoming Metals Investor Forum in Vancouver this weekend?
Yeah, the Metal Investor Forum will take place in Vancouver at the Rosewood Hotel on Friday, May 26th and Saturday, May 27th. Participation is free to the public, but you have to register online ahead of time. My session is on Saturday in the afternoon at 1:50 p.m., and my topic is going to be two global crises and what they mean for resource juniors. And there will be two parts to it, very similar to what I talked about in my January and March Metals Investor Forum presentation. The first part is about the geopolitical conflict that is emerging between China and the United States for domination of the global economy. Right now, the United States, as the largest economy, dominates the whole global economy, and the U.S. dollar is the primary medium of exchange to execute transactions. And last week, we talked a fair bit about this conflict, and I made the point that it's really like Biden has packaged it as a battle between autocracy and democracy. But I pointed out that there's a group in the middle that really can swing either way. And for the moment, it seems to be almost leaning towards the autocracy side. Well, there was a article in the Financial Times, an opinion piece by Alexander Stubb, a former Prime Minister of Finland, which really packaged it up with terms that make a lot more sense for describing this situation. The global West is the so-called democracy group. That would be the United States, Canada, Europe, Australia, Japan, South Korea, countries where the Freedom House would classify these as having a strong civil liberties and political rights, so scoring high in that whole freedom scoring system that they use. He calls the global East the autocracy countries, Russia, China, Iran, where they are clear-cut autocracy, and he doesn't distinguish between left or right-wing autocracy. It's simply a dictatorship-type control over the countries. And then he terms the global South, which is all the other members of the BRICS, India, South Africa, Brazil, and a lot of other companies in Latin America, in Africa, and in Asia, 125 of them. And many of them refuse to on the UN resolution sanctioning condemning Russia for the Ukraine invasion. They refuse to take any side on that topic. The autocracies, of course, all sided with the refused to support it, explicitly rejected it. And what Alexander Stubb points out is that the battle for the New World Order is not for continued supremacy of the so-called liberal world order represented by the United States against the China world order, but it's really for how are all these other countries in the global South going to swing in terms of who they have their economic relationships with. And the debt ceiling situation is of course, threatening the credibility of the U.S. dollar and the usage of treasury bills as a way to park the proceeds of a global transaction. And if this is allowed to result in an actual default, it will have a very destabilizing effect for this struggle. And when you look at the sort of GDP trajectories for the United States and China, by 2030, they will be very close to each other. So this, in my view, has implications for the price of gold, because we will be entering a period of transition where the global South tries to figure out how to execute its economic transactions, how to serve its own interests. And gold is a natural bridge. Now, a lot of my peers talk about gold as a hedge against inflation and fiat currency debasement and all that kind of stuff, but that's not really what gold is. Gold is a physical asset class, not a digital fiction like cryptocurrency, which refers only to the dollar system. Gold kind of refers to itself as a physical substance that takes a lot of energy to pull out of the ground and concentrate, and you cannot make more of it quite very, very easily. So I think the first part of my talk is going to present the argument as to why this grand geopolitical conflict is creating a case for $2,000 becoming the base for gold to make gains that are real price gains that put ounces in the ground into the money and lower the bar for what kind of grade counts as a meaningful discovery for a gold junior. And the other part of the other global crisis is, of course, climate change. And this applies to all the countries, the three groups, the global south, the global east, and the global west. Now, obviously, Russia doesn't care because it is a major fossil fuel supplier, and with a huge land mass that's parked in the much of it in very cold Arctic territory, it's a long-run beneficiary of global warming. So it really couldn't care less about mitigating climate change. But the global south and much of the global west, they will be impacted. And so the energy transition, that's the other big topic out there. And, yellow gold is the gold that, juniors have always chased for, forever. And when gold is down, the market is subdued. When gold is up, the market perks up. But the other two golds are red gold and white gold. And red gold is copper. Now, copper is having a bit of a slump right now because the Chinese economic rebound, post-zero COVID policy has not been very strong. We're seeing that like 20% of the Chinese 16 to 24-year-olds are unemployed, which is like a staggering number for this age group, and is a potential future problem for Xi Jinping. But the issue with the energy transition is that they project they need 50% more copper supply by 2030 to meet the demands created by the EV, electric vehicle deployment goals. And this is something, China is not really using that much nickel anymore in its electric vehicles. It's shifted to the lithium iron phosphate type battery, but the copper wiring that goes into these cars, that's going to be a demand growth source for all configurations of lithium ion batteries that are going to be commercialized and sold in 2030 and beyond. So I think the energy transition, if it is not derailed by changes in policies, which I see hard to happen, even if the United States gets a Republican anti-climate change mitigation government. Industry will keep chasing it. The global West will chase it. And of course, the global East, China, is very much interested in the energy transition also. So I expect the real price of copper to end up higher than the current $3.75 to $4 a pound level. And that will be good for juniors because, again, this lowers the grade needed to have a discovery. And a lot of these copper systems, especially ones with gold as a byproduct metal, these all become interesting for the juniors to revisit. So this is something that I think will be a very positive development for the resource juniors. And with regard to the white gold, the lithium, the predictions are that we need 500 to 600% more lithium supply by 2030 in order to meet these electric vehicle goals. And at least half of that will be supplied from existing known pegmatites in places like Australia and brine operations in the lithium triangle. But it's unclear where the second half is going to come from. And Lithium Mania 2.0 is the term I coined to describe the search for that second half of pegmatites in jurisdictions such as Canada, where pegmatites were found over the last 70 years, documented all over the place, and where now there is a huge boom underway to revisit these pegmatites and find the best ones and prep them for production for 2030 and beyond. And I only have two companies in my session. One is Westfault Mining Inc., which I introduced as a KRO favorite not too long ago as good spec value rated based on its Hasbro Gold project in Nevada. And this project is undervalued even based on the pre-feasibility study and its lower base case price. And it stands to benefit from gold finally making $2,000 a base and launching higher in real price terms. That company is not planning to spend any more money. It's packaged itself up as an optionality play, which is ready for permitting's pretty much already done. So somebody who with deep pockets, don't even need to be very deep pockets because this is not a huge mine, is to do a buyout offer somewhere in the next few years at a price that will be probably 5 to 10 times the current level. So this is the kind of stock where if you believe that all this this big geopolitical global crisis is not going to resolve itself in a calm manner, this is where you can buy something like this and just sit back and wait and have a leveraged benefit from, say, gold moving to $2,200 to $2,500 while inflation, stays relatively muted, say below 5%. And the other company is Beyond Minerals, which will be named Beyond Lithium shortly. And this company is very similar to Brunswick Exploration in that it has optioned a portfolio of over 60 properties focused in Ontario that were assembled by a couple prospectors using archival research similar to what Brunswick did. And these are all documented pegmatite showings. And the market hasn't really recognized what this is all about, but this summer is going to be the ultimate boots on the ground in both Ontario and Quebec looking for white gold who's exposed at surface, open pitable, and which is going to be the equivalent of probably 4 gram per ton or better gold discovery when you do find a substantial pegmatite grading 1% or more.
How important is the latest metallurgy press release from FPX Nickel?
On May 17th, FPX Nickel published the results of its hydrometallurgical study for the production of battery-grade nickel and cobalt sulfate from the 60 to 66% ferro-nickel concentrate it plans to produce from its proposed 120,000 ton per day Dekar nickel project in central British Columbia. Now, the study was done by Sherritt Technologies, which also did an earlier scoping study, and they used the concentrate produced during the pilot plant study for the primary flow sheet that makes the ferro-nickel concentrate, and which is going to be a direct feedstock for stainless steel mills. So regardless of what happens for future nickel demand related to the lithium-ion batteries, this project's basic future is about feeding stainless steel mills, and stainless steel demand is going to grow along with that of the global economy, and it's going to be from a part of the world in a form where it has a low carbon footprint. So insofar as anybody cares about their nickel input having a lower carbon footprint, the car is shaping up as an excellent project just on the stainless steel potential alone. But what the company has been doing is working on converting the ferro-nickel into a nickel sulfate, battery-grade nickel sulfate product. And this press release, it's very technical, it's long, the market's eyes probably glazed over reading it. They took the original flow sheet and added atmospheric leaching because they found out that partially dissolved waruite ends up neutralizing the acid generated in the discharge of the autoclave, the pressure oxidation autoclave that crunches the ferronickel. And they recycle that again into the autoclave. And the net benefit of all this is that it allows copper, which is a contaminant, an impurity that you don't want to be in there, to be dropped out as a saleable byproduct, and it reduces the reagents needed to neutralize the acid for the autoclave, and it apparently reduces the size of the autoclave, so it reduces the capex associated with this additional downstream product made from the ferronickel concentrate. Now, does this add any economic value to Dakar? In September, we will get a pre-feasibility study that shows us what the costs are after the last few years of changes. There'll be an optimized system. They hopefully have better recoveries, and hopefully the capex and opex price increases that we've seen from the inflation in the past few years end up being offset by other improvements in the pre-feasibility study. And the pre-feasibility study will now include the making of nickel and cobalt sulfate for the battery sector. But I do not think this will add any value unless we end up with a significant premium for nickel sulfate over, say, the LME price of refined nickel, and it may happen. There's some pricing that we've seen. Vale has done a deal where the price it's getting is quite high. If that becomes the reality down the road, that would be very good for Dakar. But one should really see this as a cost plus conversion of ferronickel into a downstream form that certain groups like car makers need. And this goes back then to the strategic investor that put up $12 million at 50 cents last year, stayed at 9.9%, and asked that their identity be secret. There's no way that this is going to be a mining company such as Vale or Glencore or BHP or any of the big mining companies that would have the pockets to put something like Dakar with its 1 billion plus capex into production. And so it's somebody, by being able to demonstrate that you can make battery grade nickel sulfate feedstock for the battery makers, the strategic investor is somebody who's in there who hopes that if this becomes necessary to have as a supply, they can do an offtake agreement down the road. The market, of course, couldn't care less about it. It's worried right now about what is the future for nickel prices. A lot of new nickel supply is coming on stream in Indonesia. They're also figuring out how to make a battery grade nickel sulfate from the output from the smelters and refineries that have been built in Indonesia and largely funded by the Chinese. And with the slow recovery in China and the threat that continuing interest rate hikes or perhaps higher interest rates created by a U.S. Debt default, treasury default, all of that will create an economic downturn that will lower nickel prices, and that's what could hurt the market in September when the company delivers its pre-feasibility study. And another reason investors are reluctant to buy this stock, which really should be trading in the $2 to $250 a share range, if you believe the numbers of the PEA, even with a 20% capex and opex escalation. The market right now, the glass is half empty on wondering what is the actual cost increase going to be in the PFS. And they've learned from experience from all these other projects that companies have to put into production. There's always these cost blowouts when they do the next level of feasibility study. So we have to wait three months or so for the September release of the pre-feasibility study. And the only other thing that really could perhaps move the market is finding out who this mystery investor is. And again, I've said I do not think it's a mining company. They have no reason for this secrecy. And I asked Martin about, if we knew who it was, would it make a difference in the market? And Martin Torren, the CEO, says, yes, it would. And it's also a reason that they have insisted on secrecy. So I've been busy thinking, okay, it's pretty clear this is a downstream party. Is it one of those chemical makers who provide the nickel sulfate feedstock to the battery makers, chemical makers that nobody really has ever heard of and couldn't care less if they heard that some chemical company bought 9.9% of the company and insisted on secrecy? Could it be an actual battery maker such as CATL or LG? Some people have heard of that. But again, I don't think finding out that it's a battery maker that bought 9.9% in the hope that they still need nickel sulfate when this comes into production 2030 and beyond. Could it be Tesla? Well, Tesla has lent its names to a number of deals that it has done. And at this point, nobody really cares whether Tesla has a deal or not. For me, it would have to be something, a company whose willingness to invest in a junior with a giant project like this would cause jaws to drop. And the only thing that I could imagine doing such a thing is a company from a sector that one wouldn't expect to be making an investment in a future mining project that's going to provide nickel sulfate. And it would have to be some wild name like Apple or Google. If that came out, that an entity like that, and they have their self-driving car dreams, and may even get into building these cars, not just designing the algorithms for making this happen. If that ended up being revealed, well, then I think the market would say, wow, and we would probably have an instant slingshot upside reaction in the stock price of FPX Nickel. And one other thing, the Van project, which they drilled holes in last year, they demonstrated that there is a deposit similar in size and at least similar grade, and in some portions higher grade than the Baptiste project, which is going to be the basis for the pre-feasibility study in September. They considered drilling it this summer, but they apparently have decided not to drill this summer. And I asked Martin, how much would it cost to convert Van, have sufficient drill density so that you can produce a maiden inferred resource estimate? And he said, well, it would take $4 to $5 million, which they could do this summer. But given the overall uncertainty about the market and the fact that the stock price is still at this level, they have decided that doing, say, only half of that and not being able to create a resource estimate isn't worth it. And it's better to wait until next year to spend $5 million to deliver a resource estimate. And the other reason, why it might not be so smart to have Van equally big as Baptiste right now is the market's having problems taking seriously this idea that this 0.12% nickel Davis tube assay based deposit can actually be put into production. And so when you tell somebody, well, there's going to be two of these, nobody will care. And if it's going to be producing 40 years after the first 40-year mine life is exhausted, net present value of that is worth close to zero. The more likely scenario would be that within 10 years of Dakar going into production, Van could be put into production as a parallel operation and also run for 40 years from there onwards, and with the benefit of Dakar already having demonstrated, Baptiste already having demonstrated that this does indeed work. But again, right now, nobody would care. But maybe down the road, when the project is more advanced, when the miners, the big producers, are starting to take seriously the idea of acquiring and developing this project, that's where elevating the Van into this strategic asset that could be spun out as a separate property, could be used to motivate an auction between different companies to pay up a price that includes a strategic premium for the additional van resource within the Dakar project.
How do you think Lithium Mania 2.0 will play out over the next quarter?
The bungee plunge that terrorized everybody for lithium prices since late December. A couple of weeks ago, it finally reached a limit just above $10, around $11 a pound for lithium carbonate, and it has since rebounded to a level of $19 to $20 a pound. So there's been this huge feeling of relief in the market of investors who are interested in lithium stocks, because the fear was that we would see a repeat of the 2018 to 2020 period when the Australians were so effective at mobilizing new lithium supply from their pegmatite deposits that they overwhelmed the demand from the growing electric vehicle sector. As we know, that reversed itself in 2021 and 2022. Lithium carbonate spent the entire year between $30 and $35 a pound. Those companies that were producers that were able to sell it at spot market prices rather than whatever they had contracted to sell it at much earlier, they made a killing on their lithium product sales. But eventually, that reversed itself. There was a destocking cycle that began in December. I believe the battery makers and that said, we don't want to be forced to do contracts at this ridiculous and unnecessary level. So the price was, in a sense, engineered to a fall, and it really isn't productive to anybody to have it crash back into the $3 to $5 a pound level, because that kills any incentive to really look hard and find the missing half of the 50 to 60% supply expansion that's predicted by groups like the International Energy Agency for meeting electric vehicle rollout goals for 2030. So seeing it kind of bounce off $10 and now start oscillating between $10 and $20 a pound, that is very good. And a couple of weeks ago, we saw that Allkem and Livonta have agreed to merge in a merger of equals, and that creates a Quebec champion, a powerhouse with two operations in Quebec, and also a lithium hydroxide refinery on the St. Lawrence River, and there's been lots more press releases about refineries being built, groups wanting to do deals. The whole attitude towards the whole lithium sector in Canada has improved significantly, and Patriot Battery, which has achieved a $2 billion valuation based on its Corvette discovery, where one can easily see 50 to 100 million tons of 1% to 2% lithium oxide. This kind of project, now there is talk that this company will be taken over by one of the big entities. West Farmers might be interested. There's SQM, there's Albemarle that could be interested, and then there's also the new pegmatite producers, Mineral Resources in Pilbara Minerals out of Australia, who could offer paper to acquire this world-class asset that's shaping up in the northern part of the James Bay region. So having avoided a big lithium bungee plunge, Kersplat, the market's now starting to speculate about this M&A activity. And so we could see over the next 4 months somebody like a company like Patriot Battery receiving an offer that they cannot really refuse. And the company is widely held, so it's not like there's a big control block that could resist the overtures from somebody who makes a strong offer. And so if this happens, that within a period of less than 2 years would inject several $billion into the pockets of investors who understand that Corvette is still, even as large as it is still only a partial solution to the future supply problem. And that's what the Great Canadian Area Play, the James Bay region is all about. It's also what the pegmatite hunt in Ontario, Manitoba, Saskatchewan, Northwest Territories, even Atlantic Canada. This is what Lithium Mania 2.0 is all about. And the past year, for most of these companies that have assembled land position, it's been one of archival research. And this is the interesting thing about Beyond Minerals, a reason that I have embraced it as a bottom fish spec value rated company and invited them to the Metals Investor Forum. It was basically a shell until about a couple of months ago, and then they did a deal with Last Resort Resources and Bounty Gold, which are private companies owned by Jason LeBlanc and Jace Angel, and these two friends who are Red Lake based, they had been busy doing gold staking in the Red Lake area and weren't really getting many offers for the gold portfolio because gold has sort of lost favor with speculators in general. And they got their head around what was happening with the lithium space, and they could see Frontier Lithium, what had happened there. I mean, there was a worthless deposit that sat there held by the predecessor for 20, 30 years, and all of a sudden it was supporting a $400-500 million valuation. And the only reason it doesn't have a higher valuation is because it's in a relatively remote area where you could only use a winter road to get anything out, and that means it's not going to be developed quite as quickly as other projects. So they decided to do a deep dive on all the archives, and there's I talked to Jason LeBlanc, and he said there's 10,000 documents, and they went through them all with a set of criteria looking for various evidence of pegmatite, of context where it made sense that this could be an LCT type pegmatite. And they went and researched the claim system and went on a staking binge and focused on Ontario. And originally they started in the Western Ontario area, surrounding area of Red Lake to the north and to the south, immediate east. But eventually they encompassed all the sort of known pegmatite districts in Ontario. And they assembled over 60 properties, and Beyond in April did a deal to auction all of it, which came out of meeting with these people at PDAC in early March, and doing a deal each deal is for each specific property. So it gives Beyond the flexibility to keep this one, drop this one. And what they are doing now is they will be putting boots on the ground, doing site visits, armed with their lips gun to see if there's any lithium potential when they scrape away the moss or find the original pegmatite. And what they are doing this summer is what most of the juniors are doing. It's what Brunswick Exploration will be doing this summer. This summer will be a period where these companies disappear into the field and start finding where these pegmatites are. And in the James Bay area, I've sort of divided them into the first order exploration in the northern half, where there's been very little work done, and this is where Patriot's Corvette trend is located. And then the southern half, where there's been a lot more looking done based on the CYR pegmatite sticking out of the ground and Wabuchi, ones that were so obvious you can see them from Google Earth. And so that area in the southern part of the James Bay region has already been people have looked a little harder, and they've tended to ignore the smaller outcrops. So now we have what I call second order exploration, where companies are in this area also putting boots in the ground, putting together rationales for why this area is more prospective than other areas based on geological context, lake bottom sediment anomalies, and also glacial dispersion histories. So that's happening both in the north and southern part. Lots of crews in the field, not that much drilling. Brunswick just reported drill results from the Anactal West project, and yes, they have some decent intersections of 1% plus lithium oxide. They're putting boots on the ground to continue to assess that small claim block, which extends another, 5 kilometers east of where they intersected the portion of the system from Allchem's property that projects onto theirs. And also the main Anatakal project, which is a very large project, 22 kilometers to the east, which has not received a lot of attention, but does have reports of pegmatite showings on the property. So this summer until September is going to be a massive prospecting period, perhaps the biggest ever in the history of Canada, as all these areas that have pegmatite potential, people are sent into the field, and if you haven't got hold of an XRF gun or a LIPS gun that you can shoot and sort of get a quick reading on whether or not this is the right type of pegmatite that you're looking for, you're going to be out of luck, because sending samples of something that looks like spodumene to the lab, it's going to take forever to get results, and it's not going to be super meaningful because you'll have taken one little chunk or maybe done one little trench, and it's not really going to tell you very much about what the potential is. But September is going to be the key period, and if you don't have a drill crew lined up, you're going to have to wait until 2024 to get anything done. But by September, we should also have a resource estimate out from Patriot Battery Metals. We may even have seen a bidding war erupt to take out Patriot Battery Metal. And then there's companies that have, for example, Idaho Champion Mines. They have a huge trend parallel to the Corvette trend to the north, which they have staked. And we don't know what the boots on the ground will reveal, but because nobody ever really bothered to look hard, because nothing obviously stuck out of the ground, who knows what that trend, it was originally staked for gold potential. The main one, Corvette, was also staked for gold potential. Extensions to the west, part of which Brunswick owns as the Plex, that was all staked for gold. In fact, when they were drilling for gold, they actually intersected pegmatite. Doesn't sound like it's the right kind of pegmatite, but that doesn't matter because they weren't drilling the pegmatites that were farther away. So there are all these boots on the ground checking this out, telling us what they have, setting us up for a drilling frenzy in the final quarter of this year and running right into the first quarter of next year. This is going to be an extraordinary discovery exploration window, and it's going to be the foundation of Lithium Mania 2.0. And the juniors have sort of stalled in the past couple of months while we watched the bungee plunge happen, and also worried about what the debt ceiling is going to do and when they're going to stop raising interest rates. But I think by July, we're going to be past that. The companies that are best at articulating what they are up to will start seeing their prices creep up. But then who can show us what is drill ready, what its size is, what appears to be the grade implications that surface? That's where you're going to get the glass half full, three-quarter full type of discovery, exploration, speculation that we haven't seen on a large scale in the resource junior sector for a very long time.
John, thanks for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.